Welcome to Drill Down Earnings. We have quarterly results out from Dell. What an interesting quarter from this giant company. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. Dell, yeah, that's an important company in technology. Q1 fiscal 2026 earnings from this company, better than Wall Street expected. The revenue growth has flattened a little bit, but my goodness, it's 5% growth at a really, really big number. In particular, the company doing $23.4 billion in revenues, up 5% on a year-over-year basis. As I mentioned, operating income of $1.2 billion, up 21%. So revenues up 5%, operating income up 21%. Hey kids, that's the way you want to do it. Make more money. Even when you're selling only a little bit more, make a lot more. This business is just really big and really successful. They're selling higher and higher margin products. And that allowed them to raise their guidance. Their guidance was reaffirmed despite the volatility they've seen in the numbers and in the global economy. They expect $103 billion in revenues for this fiscal year that has just begun. And in that $103 billion, I should say, they think they're going to do $15 billion in AI server shipments in the year. I say shipments because there were a lot of bookings. We're going to get to that. So operating margins at 5% for this company. Compare that to last year when operating margins were about 4% in this first fiscal quarter. So margins getting better and better from year to year. Interesting revenue blend. Commercial and consumer at about 54% of revenues. Servers now 28% of revenue. Servers and networking, storage 18%. Of course, so much of that is EMC, the business that used to be EMC they've acquired. The AI optimized servers just surged. Dell booked $12.1 billion in AI server orders in the first quarter, more than all of fiscal year 2025. And yeah, fiscal year 2025 was pretty good. Again, in just 13 weeks, booking $12.1 billion in orders. They shipped $1.8 billion in the quarter, but they ended with $14.4 billion in backlog. Just amazing. Their Internet Services Group, their ISG group, I should say, servers and networking, just doing great. They hit a record of $6.3 billion in the quarter, up 16%. Year-over-year storage, as I mentioned, up 6%. There are AI factories. You hear Jensen Huang talk about this a lot at NVIDIA. Dell AI factories, what they call the Power Edge XE9780. I call it the 97XE. Maybe they call it the 9780. I don't know. Anyway, that thing's going great guns. The AE7745 that has the Blackwell chips in it, those are going great guns. Their power cool, liquid cool servers doing well as their AI capable Pro Max PCs. So AI PCs doing well. AI business for the PCs was an interesting driver here. Now, as I mentioned, AI servers growing at 16%, but the PC segment was a tale of two cities there. The consumer revenue was down 19%, similar to what we saw from HP. But their commercial business actually really good, up 9%, which is really interesting. We kept hearing about all this economic uncertainty driven by the tariffs in April, yet these guys still delivered 9% growth. For commercial PCs, consumers, however, are down. How did the market react? Well, initially the market loved these numbers. As the numbers we dug a little bit deeper, up only 2%, but I thought it was a fantastic quarter. The stock's actually down 37% in the last year, which just seems bonkers to me because this business is doing so well. Now, they talked about the backlog. Jeff Clark, Michael Dell does not do these calls anymore, but Jeff Clark, the chief operating officer, colorful guy, talked about the great success they're having in backlog and taking orders. They just can't ship them fast enough because they can't get enough Blackwell chips. The demand for the Blackwell chips is so much greater than they can actually achieve, but customers are ordering stuff nonetheless, even though the design challenges to building these AI systems are not for the faint-hearted. Well, I don't want to take Jeff Clark's words out of his mouth. Here's what he had to say.
The backlog is primarily Blackwell. And it has a combination of GB or ARM-based Blackwell with x86 Blackwell. It has some Hopper in it as well. And yes, these systems are complex. They're not for the faint-hearted. This is where real engineering, I believe, matters, where innovation matters. The custom design nature in some of these very large deployments are unique, pushing the envelope, working with our partner NVIDIA, and then specifically our customers, to design a custom solution that meets the needs. And not only designing it, delivering it, and having it work at volume or at scale is equally as difficult. And then when you deliver it, as I made reference earlier, it actually works. We are moving towards when we deliver and it is delivered at our customer site, that it's up and operational within 24 hours. Challenge anybody to see if they're close to that. I think we continue to differentiate ourselves. This is the opportunity. Blackwell challenges many engineering principles. We think we're working our way through them. We're excited about new versions of Blackwell as they come out later in the year.
All right, so what's it all mean? What's your big drill down earnings takeaway? What's the one number that tells us a whole lot about Dell? So Dell fiscal first quarter 2026 numbers. So what you want to remember here is 5% growth was good, but the AI server growth was fantastic for this business. And I think maybe if you want the one number, it wasn't the 16% growth in servers or the billions and tens of billions or $10 billion, $15 billion in backlog. No, the number that really you want to remember here is $6,321 million in just 13 weeks. That's how much they sold in terms of servers, much of that driven by AI servers for data centers all over the world from Dell. And thanks for checking out Drill Down Earnings. Subscribe if you like this so you can catch more of our Drill Down Earnings reports in the future.